I'm Russell Clark, and this is VixShield's Market Close Recap, where it isn't news till we talk about it. Here's what actually happened today. The market opened with that familiar midweek caution we talked about this morning. Remember how I said the institutions were already positioned for containment ahead of the Fed meeting? They proved it. While the headlines screamed about potential shocks and crashes, our side of the tape stayed disciplined. The S&P kissed its recent highs early, then spent the rest of the session in this tight, almost respectful grind. No fireworks, just steady digestion. By the close, the index had barely budged from where it started, exactly the kind of day the big money likes when policy risk sits on the calendar. This morning I told you to watch how the VIX behaved because it had already bled overnight. And bleed it did. It dropped again today, settling comfortably lower than where it opened. That compression told the real story. The fear gauge refused to spike, even as the pundits pushed panic about tomorrow's statement. Oil popped hard on Middle East supply chatter. The dollar found a little more footing. Gold gave back ground. Bitcoin and its cousin took some hits on those policy uncertainty whispers. But equities? They simply refused to break structure. That negative correlation we keep preaching held textbook perfect. SPX steady, VIX lower. You know what that means for us. The setup we mapped out at the open played out almost to the letter. Now let's talk about the traps that fired today. Or more accurately, the ones that didn't quite hook their usual victims. The financial media spent the entire session beating the drum about a possible stock market crash. Those headlines you saw this afternoon read like pure theater, one after another warning of imminent collapse right before the Fed decision. You could almost hear the clicks being counted in newsrooms across Manhattan. That's the Wall Street playbook we talk about every week. They manufacture fear to keep retail emotional, dependent, and ready to sell at the worst possible moment. Remember last Tuesday when everyone panicked on similar noise? We didn't. We stayed in our lane. Today, the same pattern repeated. Retail traders who chased those headlines probably sat on the sidelines, or worse, flipped to the short side thinking this was finally the big one. Meanwhile, the smart money quietly collected premium in that narrow range. The trap is always the same. They sell you drama so they can buy your fear cheap. Our community sees through it because we've trained ourselves to trade the math, not the narrative. And that's why you are here. That's why we built this. Because you can't talk to your family about days like today. They hear crash warnings on cable and assume the sky is falling. But we know better. We understand that when the VIX trends lower and the term structure stays in healthy contango, the probability tilts hard in our favor. The establishment profits when you react. We profit when we don't. Today, the media overhyped every minor wobble as evidence of fragility. They ignored the fact that realized volatility over the past 10 days has stayed exceptionally low. They glossed over how Iran tensions remain contained and trade talks sit in a holding pattern. Instead, they fed the fear machine because fear moves eyeballs and commissions. Our tribe doesn't play that game. We saw the tape. We saw the big boys layering measured protection overnight just like we expected, and we positioned ourselves right in the heart of where the real probability lived. What worked today was exactly what we've been drilling into this community for months. Our iron condors sat right in the sweet spot all day. They handled the action beautifully because we followed the RSAI verified signal this morning. This morning's outlook called for a clean place day with all entry gates passed, and that's precisely what we got. The methodology delivered again. While the world chased headlines, we collected solid premium in an environment built for exactly this kind of range-bound behavior. The forward temporal shift we discussed earlier in the week also proved its worth, with the expected daily range staying compressed and the VIX above that key level, rolling out to capture additional Vega made perfect sense. Our adaptive layered VIX hedge stayed fully active across all three layers, even though we didn't need to add fresh protection today. That shield sat there quietly, doing exactly what it was engineered to do, protecting capital without getting in the way of income generation. Here's what we learned, and listen close, because this is where the real edge compounds. Discipline isn't flashy. It doesn't make for good television. But on days like today, it separates those who last in this business from those who become statistics. We learned once again that when the rapid skew AI engine says place and the gates line up, the market tends to respect those levels. The contango in the term structure acted like a tailwind, helping time decay do its quiet work. We also saw how the negative correlation between the S&P and the VIX remains one of the most reliable relationships in modern markets. That textbook pattern we referenced in the morning show held firm from bell to bell. The lesson? Trust the process when others chase narrative. Ignore the fragility curve that catches so many when they scale up without proper hedges. Our community stayed patient. We sized according to risk tolerance. And because of that, we walked away from today knowing the math worked in our favor yet again. Zooming out to the bigger picture, this Wednesday close fits perfectly into the weekly arc we've been tracking. Monday's quiet confidence, Tuesday's gentle upside, and now today's measured digestion all point to the same underlying reality. The market has been pricing in the Fed's cautious tone for weeks. Policy risk exists, sure, but it isn't new. It's known. The institutions aren't panicking, they're positioning. While retail stares at crash headlines, the big money continues to sell volatility in these compressed ranges. Geopolitically, those Iran tensions we mentioned earlier in the week never escalated into anything that moved the needle. The joint efforts on dismantling crypto scam centers and the latest PMI data out of China both suggest resilience underneath the surface noise. Even the unemployment and producer price readings that came across the tape today failed to spark the volatility the fear merchants predicted. This is classic complacency, not euphoria. And complacency, with low realized vol, creates exactly the environment where our methodology shines brightest. The smart money isn't seeing the world the same way the financial press does. They're watching the dollar's mild strength, the contained move in oil, and the pullback in gold as signs that the system still has room to breathe. They're not loading up on directional bets ahead of tomorrow's Fed statement. They're letting the premium come to them. That's the pattern forming. A slow, grinding acceptance that known catalysts rarely deliver the shock retail expects. This fits the monthly narrative too. We've seen this movie before. Headlines scream, volatility compresses anyway, and disciplined premium sellers win the week. Today was another brick in that wall of consistency we're building together. And tomorrow, we'll be ready. The Fed statement drops in the morning, followed by Chairman Powell's press conference. That's the next major data point that could shift sentiment. We'll be watching whether the VIX decides to pick up any steam after digesting the language, or if it continues its gentle compression. The 10-year yield has stayed remarkably stable through all this, and any break there could tell us plenty about where capital wants to flow next. We'll also keep eyes on whether that oil surge holds or fades, because energy moves tend to ripple through the broader risk assets. But no matter what headlines hit the tape overnight, our process stays the same. We let the RSI engine scan live skew. We respect the gates. We match our approach to the prevailing regime. The temporal theta framework stands ready if we need to shift horizons to capture more vega. Our layered hedge remains active and earning its keep. Tomorrow is simply another clean slate where probability, not prediction, guides every decision. This is why we built this community, because days like today remind us that the edge isn't in being smarter than the market, it's in being more disciplined than the crowd. While the establishment tries to keep you emotional and reactive, we stay process-driven and calm. We've turned what looks like ordinary midweek trading into a repeatable income engine, and that only works when we do it together. When you know you're not alone in seeing through the traps, when you understand that consistent premium collection in these environments beats chasing home runs every single time. That's our tribe. That's our edge. And be sure to listen for any breaking news from Miss Vicky. She'll flash the key updates the moment they matter. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.